The fact that we're seeing some of these stocks under pressure, despite the fact that there were beats and strong numbers in other areas of the earnings reports, what does that tell you?
Yeah, the market's cruel. Companies that are giving back a little bit to customers in the form of maybe holding some prices down or spending a little bit more to make sure the product is in place to drive the top line are getting hit if the gross margin is down. We saw that with Target today and Walmart yesterday. More so than I remember, the market is just focused on gross margin more than comps and same-store sales. Usually in the third quarter, the reports are all about sales momentum as you're looking ahead to the holidays. This year, it's much more focused on the gross margin because of these supply chain issues.
Is this a shifting narrative that's going to stay with us into 2022 where these stocks are concerned, or is this really just a product of the supply chain bottlenecks and inflationary pressures that are dominating the market conversation more broadly right now?
Yeah, I think it's more temporary. I think at some point, maybe mid 2022, these supply chain issues will start to dissipate. In fact, I think they're sort of peaking right about now. And when we're back to not having to talk about these supply chain pressures constantly, then I think it'll be much more the sort of focus on top line like it usually is. So I think it's a little bit of a temporary phenomenon, particularly in front of the holidays.
Yeah, I mean, meantime, Home Depot trading at all-time highs. It's up higher again today after a big move yesterday after its earnings. Lowe's is trading higher as well. We're seeing this resilience within home improvement. Is this something that is going to continue to be sustainable? I mean, we hear about all these macro trends about housing, and certainly the CEOs at those companies are highlighting that too.
Yeah, after these guys put up record comps last year in the 20 to 30% range, everyone thought that this year they turned negative against that, but clearly that's not happening. Consumers are very focused on their home. I think we're all living this hybrid lifestyle where sometimes you stay at home, sometimes you go to the office. But that's driving continued spending at the home, and I do think that's a sustainable trend, yeah.
Hey, Michael, we're keeping like one eye on some of these new lockdown restrictions in Europe. And I do notice that when you talk about risks, I mean, the possibility that we might see stricter lockdowns could clamp down on consumer sentiment and hence their ability or willingness to buy at retail. I mean, how would you characterize that risk?
Well, so that brings you back to the omnichannel retailers. And to me, omnichannel really has proven itself during this pandemic to be the right model. And so you think back to early in the pandemic and then throughout 2021, the retailers that had strong omnichannel offerings, the companies did really well and the stocks did really well. And so I think, if all of a sudden we get bigger or more lockdowns, I think investors would revert back to that playbook, which worked so well during the pandemic. So these big omni-channel, big box retailers, I think, do well in that environment.
So quickly, Michael, buy on the dip for Target and Walmart, and what do you think of those home retailer or home improvement names as well? Quickly.
Yeah, I would buy on the dip. I mean, I think both Walmart and Target are doing the right things to give back a little bit to their customers here in terms of pricing and making sure the product's there. It hurts in the near term, but it'll pay off, I think, in longer term market share gains and bringing in new customers. We also like the home centers. We like more of the Lowe's and Home Depot. We do a buy on Lowe's, hold on Home Depot. That's more of a valuation call on Home Depot. But we like Lowe's not only because of the industry tailwinds behind them, but they also still have this self-improvement story behind them. When Marvin Ellison started, the operating margins were 600 basis points below Home Depot's. Now it's closer to about 280, so they made progress, but there's room to go.